Welcome, listeners, to the Finance for Starters podcast. Your host, Michael Pfister, Wealth Manager.
And Austin Mylott, Director of Insurance Sales.
So the past few podcasts that we've done have kind of been a general overview of the topics and really not diving into the topics themselves. But this week we find it would be appropriate to dive in a little more just because we find that most of you probably already know a general understanding of it.
Yeah, we're going to be talking about life insurance this week, and we know most people have at least a baseline understanding of what it is, what it's for, even how to get it. But there are some things that people may not fully understand and some applications of life insurance that people maybe don't totally know.
Right.
How to use it or when to use it.
Right. So just in case we have any listeners who don't know anything about life insurance, we're just going to give you a quick overview just to bring you up to speed with everyone else.
Yeah, it's basically just coverage in the case of a premature death. So as the beneficiary, if let's say your mother has life insurance policy and you're the beneficiary, if she dies within the parameters of that policy, you would get a payment.
Right, and it basically removing that financial burden that, someone in the family that's producing income for that family is no longer there. Your life isn't upside down at that point.
And that's obviously the standard use for life insurance. That's the policy everybody sort of understands. Most people have it, or if they don't, they at least know that they need it. We wanted to break down a little bit the differences in policies, and there's two main ones, and it's term and perm.
Right. And so, I'm sure you've heard of different types of life insurances, and typically that just falls under the permanent side. So term's pretty basic. It's pretty straightforward. You have different years, 10, 20, 30, and then, you have a set death benefit. Like, let's say it's $500,000, 30-year. Pretty straightforward. It's...
Yeah,
you've got that insurance. You're paying whatever premium it is, and then at the end of that term, you no longer have that insurance.
I think the best analogy is term is the closest to renting insurance.
Right.
You pay for insurance for a set period of time, and then when that time period's up, you don't pay anything else, but you also don't keep any of the insurance that you've previously paid for.
Right. And there is also conversions within term. So it's like, let's say you hit that marker, whether it's 20 years, 30 years, whatever it might be. Then typically an insurance company will give you the ability to convert that policy, but it's usually way more.
It's you got to remember too, if you're saying if you have a 30-year term and you got it in your 20s,
maybe you're paying $30 a month or something like that.
$40 a month,
and now they're like, you're paying $300 a month
for $250,000, and you're living high, living the dream.
Right.
And then it comes that term's up, and you're 55 years old. It's not $40 anymore.
No, not even close. So, but that's pretty much the basics of term. There really isn't a whole lot about it, and you have like some riders here and there. But
yeah, we could do
that's a whole other deep dive as well.
5-hour podcast on just riders on insurance policies.
Right. And we've said that before in other podcasts as well.
Yeah, I want to really quick just give an example before we move on.
Yeah, sure,
I know some people are probably thinking like, well, why would I ever want to rent insurance?
Right.
That seems like a big waste of money, waste of time, when I could just pay a little bit more now to keep permanent insurance. So just real quick example. I know somebody, they have a permanent policy. They've had it for years. They had a child who was going to college, and they wanted coverage in case they died in that, what do most people go to college for? 4 or 5 years, 9, 10, whatever you're in the mood for. They wanted that coverage for 4 or 5 years while their child was in school in case anything happened. So they did a term policy for that set period of time. And then when it was over, they didn't have to pay anything else, and it sort of helped ease the burden and a little bit of peace of mind in that situation.
Right, and then there's also the other side, whereas let's say an advisor or an agent's looking at that life insurance situation for, a family.
Yeah.
They might say, all right, maybe they don't have as much money to pay for a permanent policy, so then maybe the term makes more sense. So, but at the end of the day, you have to see what is recommended in that sense.
It really depends person to person. There's not really a set answer for what to do with life insurance. That really comes down to just the
seeing what the situation is. Right.
The conversation between the agent or the advisor and the person looking for the insurance.
Right.
You mentioned a little bit that the term is cheaper than perm, and it's probably important to remind or inform listeners is that it is a lot cheaper to do a perm policy than a perm policy, but there are a lot of added benefits to perm that you don't necessarily get with a term policy.
Right, and so, I mean, the real key difference, of course, is the straightforward one, which is, term ends at the end of whatever period you choose. Whereas permanent, that policy stays with you for however long you live. And so someone could buy that permanent policy at the age of 30, and they would still have that policy when they're 75, 80, 85. And then let's say they pass away at, let's say, 86. They're getting whatever death benefit they had before. But, there's so many other different facets of permanent policies. For one, cash value.
Cash value is a great one. Premiums paid into a permanent policy over time will build up a cash value in that policy.
Right, and there's all sorts of applications with that even.
And it's with a term policy, the premiums you pay in, they'll sort of just disappear out into the air. So a perm has a little bit more of some real benefits to it, which when we're getting into the differences between the two, that's really a decision that comes up to who's shopping the insurance.
Right.
There's also, perm's got a lot of riders. There's disability riders, there's long-term care riders. So there's a lot you can do with permanent insurance that you can't do with term.
Right. And so, the thing is with permanent policies, term, it's pretty straightforward. There's one application, which is for that death benefit. But with permanent, there's different applications such as asset protection. And so if, let's say you got sued because, let's say, one of your kids, damages a car or something like that, got into an accident, and now the other person's suing, that person cannot seize any value of that life insurance policy within a perm. It is a protected asset. So in the planning stages with, an advisor or insurance individual, that might be something that comes up, and maybe that's a suitable option for an asset protection strategy.
Thanks, everybody, for joining us this week. It's been me, Austin Mylott.
And Michael Pfister.
Thanks for listening in. We hope we've cleared up some questions, maybe given you some information you didn't have. If you think of anything that you would like us to cover, feel free to get in contact over Facebook and like and subscribe.